Good morning, everybody. Hey, welcome to Friday, July 17th. I hope your week has been going well as we head to go into the weekend. You know, yesterday, another day of coronavirus numbers that are continue to be very high, along with our local hospitals getting close to capacity, if not at capacity. So let's be careful there. And I hope that you have a great weekend. As we get ready to talk to Dave, though, hey, yesterday was kind of a down day. And today it looks like maybe, just maybe, we'll bounce off of those numbers and see where we end up. A couple more earnings coming out today, and we have some housing numbers coming. So stay with us as we get ready for our conversation with Dave this morning.
5.7 Light FM. Hey there, it's 8:40 now. 20 before 9. Let's check in and find out what Wall Street is doing to your retirement today. You got money at risk. You're probably listening to this pretty carefully because our swings are wild of late. Let's go downtown to the offices of Statler Financial Services, where Phillip Statler is standing by, and let's see what's going on. Phillip, how are you this morning?
Hey, doing well today, Dave. You know, the markets yesterday kind of a little touchy and kind of gave away throughout the day to end up in the red.
Yeah, I was going to. That was my first question to you when we first got on the phone before we went on the air. We started out with some green ink yesterday morning at a decided amount, and then once we opened up, it was just one of those run-out-of-steam days. The Dow ended up down 135 points, NASDAQ down by about 77, Standard & Poor's down by about 11. I mean, it wasn't a rock-crushingly bad day, but compared to where we were starting out, it was kind of a disappointment, wasn't it?
Yeah, it was, and, you know, several reasons, I think, for some of that. One is, you know, we talked about China was getting beat up pretty bad a couple days this week. And then the coronavirus numbers keep going up and up. And I got to think, Dave, that's weighing some on the markets because, hey, if that number keeps going up, more and more governments local governments are dictating certain things to certain businesses. And so those things are not going to be good for the economy. They may be good for our health, but they're not going to be good for the economy. And I think maybe some people are starting to read some of the tea leaves and looking down the road a little bit further.
And I think some of the sense of certainty that the reopening is going to, you know, worst case be on hold is kind of losing its steam as well. I mean, we're starting to see cracks even in the armor of the administration and the president's own party. A couple of Republican governors saying, hey, look, guys, we got to do something. Dr. Fauci out in the public domain yesterday basically saying we're screwing this up. It's not a united front coming out of government right now either. Add to that the states like California that are taking some pretty substantial measures to return to a contraction. It's got to at the very least put the stock investor on notice and put him on a little edge, doesn't it?
I think especially the traders the stock traders, guys, they make their living doing this, buying and selling on a daily basis. And so they're not long-term investors. They're just making a dollar now. So, you know, they become a little bit more conservative.
Absolutely, understood. Had a couple of macro reports out this morning, and it was kind of nice to have a pleasant surprise for a change. Housing starts grew by 17% during the month of June. I asked whether that was a big surprise or a pleasant surprise. I don't know how big the surprise was, but I know it was better than the market expected.
It was better than expected, not by a lot, but hey, it's better. That's what matters, and it's better than last month. I think that's even more important than what they expected, as well as permits. You know, permits were not quite up to what we expected, the people I follow, but I mean, it wasn't enough. I mean, I would say it's in line, it's within that margin of error for anything. And again, it was up compared to last month. And that shows a resilience in the real estate and the construction market, which is good for our economy.
And that drives a lot of the economy as well. I was kind of putting a whole bunch of factors together. I see housing starts up by 17%. Building permits, which means future housing starts, being up by over 2%. And then I noticed that the federal government's 30-year Treasury bill falls by 3 basis points this morning, which gives us a little level of assurance that probably we ain't going to see any increase in mortgage rates anytime soon.
No, we're definitely not going to see. I mean, I say that, but I don't know that they'll get a lot lower. I don't know how much higher they'll go either, but they stayed really very low here for the last 3 or 4 months and continued that way.
Absolutely, and there doesn't appear to be any pressure upward unless we have a lot of defaults that end up having to correct the market somehow, and that's all of it augurs well for a major part of the economic activity we have, the construction industry. So I'm a little bit optimistic on that. Then I kind of turn the corner and I go to the individual stocks, and what the heck went on with Netflix? They were supposed to be the high flyer, Phillip.
Well, they made a profit, which was good, right? They made a profit of $1.59, just didn't quite live up to Wall Street expectations. They missed their earnings number by 22 cents a share. So where did it come, right? It came in subscribers, which is typical of this type of streaming service, right? They only brought in 2.5 million new subscribers, well below the estimates. The estimate was more than double that. They expected 5.2 million new subscribers. And so that was a huge miss for Netflix. Even with them being profitable, they didn't meet that key performance indicator. And so they're trading down this morning 7.5%.
I think expectations might be a little high. 2.1 million new subscribers. They added near 1% of the country in 1 month, in 1 quarter. And that wasn't good enough for their investors.
Well, it wasn't good enough for the analyst anyway.
I sometimes think that expectations for some of these high-flying stocks might be a little overly ambitious.
Yeah, I think so.
Yeah, we're kind of at the end of the financial sector, but there were some names that reported this morning, I know.
Yeah, we still have a couple. We have BlackRock, which is an asset management firm. They beat by about 86 cents a share. Made $7.85 a share. Good deal for them. Revenue top forecast. Profit was up 21% from a year ago. They've seen a 7% increase in assets under management. So they've had a good quarter, good year. There's no right now. They closed yesterday down about 0.3, and there's no trade indication yet this morning. So it's set to open at what it closed at yesterday. Then we had Regions Financial, which is Regions Bank. Mm-hmm. Now they had some issues. They lost 25 cents a share. They were expected to make 5 cents a share. Revenue was above estimates, but this is, you're talking about mortgage issues and defaults, and that could affect the mortgage rates. Well, that was Regions' issue. They made a larger than expected increase to their loss reserves. And so that's what caused them to go into the loss category, which is concerning to the stockholders. They closed up yesterday about a little over 0.5%. Right now, they're trading down almost 3.5% before we get open.
I was going to say they're right toward the top of my big loser column. Yeah, with revenue up and profits swinging to loss, that kind of makes your investors sit up and take notice, doesn't it?
Yeah, it does. It does. That's talking about some issues that they see down the road. Mm-hmm. So then we've got a transportation company. We got J.B. Hunt, which, if you remember last quarter, they had a few issues and didn't quite hit the number. This quarter, they did well. They made $1.14 a share, which was way better than the 80 cents that was expected. Revenue was ahead of expectations also. And they're getting a little bit of a boost from Deutsche Bank, which has upgraded their stock from sell to hold. So good for J.B. Hunt. They're up 3.3% this morning. And the last one I have for you today, Dave, is going kind of in the construction industry, or the home improvement industry anyway, and that's PPG Industries. And that's those are the producers of paint and different types of coatings.
The It's the old Pittsburgh plate glass. I know that's what PPG
Yep.
stands for. I'm assuming they're still in glass.
It doesn't say anything about glass here. It says paints and coatings. So they made almost $1 a share, which was better than the 70 cents expected. Revenue beat forecast. They said they saw an increase in do-it-yourselfers, painting projects, and that kind of stuff as people stayed home more. And so good for them. They're up 4% this morning as we get ready to open.
I was Googling PPG while you were saying that. Yeah, they only list themselves as paint and decor. Evidently, they sold off their glassworks. That's interesting, isn't it?
Yeah, that was probably breaking their profits.
Probably. Resetting the table. I learned something every day, I'll tell you. Resetting the table, it was an off day yesterday. Not monstrous, but 0.5% is 0.5%. Dow was down, NASDAQ down, S&P was down. 45 minutes before we opened this morning, Philip, where are we going?
Hey, right now it looks like we're doing the exact opposite today, Dave. We're going up. Everything looks green right now. Not by huge numbers, but hey, they're green. Dow's up about 0.5%, $121. The S&P 500 is up about 0.5%, a little over $17. NASDAQ's the best one right now, up almost 1%, a little over $100. And then we look at the commodity side of things. Silver is basically flat right now. Gold's up about 0.4, and we've got crude oil heading down 0.4, a little bit less than what it opened up yesterday. It's at $4.50 a barrel right now.
Yeah, I was looking at it. It looks like it's in the same zip code, but off a little from yesterday morning, from my memory. So staying above 40, that's good news anyway.
Yeah.
World markets, by and large, mixed bag. Japan was off by a bit. Hong Kong recovered nicely this morning at the close. Europe is trading up fractionally midway through their day. Philip, this is up, this is down, this is weird. You were saying that Asia's got some issues with the Chinese stocks, and heaven only knows where the bug is going to take us as we go through the coronavirus crisis. How do I find you to get a hold of some stability in my retirement fund?
Dave, give us a call at 863-382-0037 and schedule your no-obligation financial x-ray where we look at how much risk you have. I mean, man, we've made a huge recovery. Now's a great opportunity to get a second opinion on your portfolio. And then follow us on Facebook, Statler Financial Services. Like our page there where we repost this every day. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on Highlands News Talk 730.
And we stream all these products as well, so you can catch them online even if it doesn't work in your house at newstalk730am.com and here at 1057lightfm.com. Philip, thank you so much. You have a marvelous weekend, and we'll see you on Monday. Fair enough?
Fair enough, buddy. You have a good one. I'll talk to you Monday morning.
Thank you kindly. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, let me say thank you. Thank you for joining us. I appreciate everybody that tunes in on a daily basis. Like our page, share this with your friends and family, and let them know that we're open for business. We're here to help. Whatever questions, concerns they may have, give us a call, 863-382-0037. Hang in there. We got some announcements coming next week on some different things we're looking to accomplish. Take care. Have a great weekend, and we'll talk to you on Monday.